Hey everyone, this is Jason from Leavitt Brothers. It's been a crazy couple weeks. Want to do an update on my state of the market video. I somewhat hesitate to do this today because the charts have been so wild lately. The indicators might not work exactly as they normally do. Mostly because the market right now is being held hostage to what happens in Europe. If news of the bailout is good, the market could firm and move up. If news of the bailout is bad, if the bailout either gets canceled altogether or if the $1 trillion number gets lowered to 500 million, the market could take a big hit. So me as a technician, I judge the market and I based on the charts, and I do what the charts tell me to do. But in this case, news trumps the charts, and the potential news that's looming out there is so big that we can't entirely trust the charts or trade off them. Having said that, my goal here in looking at these charts is to basically answer one question: is the market trending up? Is the market trending down? Are there any hints that the trend might be changing? A lot of times I look at the indicator and I could tell what the trend is without even looking at the index charts. So that's the goal here, even though in the back of my mind I'm thinking that the answer that I get can't be 100% trusted because of the news that potentially looms out in Europe. Alright, having said that, let's get started here. Alright, here's the S&P 500 versus the New York Stock Exchange advanced decline line. You can see as when the S&P 500 pulls back, the advanced decline line also pulls back within the uptrend. So the pullback from 2 weeks ago looks pretty orderly. I mean, it was pretty stiff, but that it was stiff the last two times also. But as far as the level that it hit, I don't see anything alarming here. Nothing pops out as telling us that like something here is different. One thing of note here to keep in mind is that the NYSE advanced decline line treats all stocks equally. Doesn't matter if it's a big company, small company, high volume, low volume, expensive stock, cheap stock. It treats all companies equally. And if I judge the market purely based on this indicator, I don't see anything extremely wrong. This obviously will change if right now we're below minus 400. If we take out the low again, then I would say like, hey, something here is different. But for right now, this line doesn't tell us anything bad is going on. Here is a similar chart: the S&P 500 versus the NYSE advanced decline volume. Whereas the advanced decline line weights all stocks equally, this one obviously weights higher volume stocks more. And this chart will tell us that something is different. It would tell us that the pullback that happened 2 weeks ago is different than the pullback that happened previously within the uptrend. So this is something to keep an eye on, especially if we can't firm here very quickly and start moving up and get back above zero. If this comes back down to minus 700 or makes a new low, then this chart would definitely tell us that something here is different. This is not a normal pullback within an uptrend. Alright, next chart, S&P 500 versus the New York Stock Exchange new 52-week highs. Works similar to the other indicators, that within a pullback you get a pullback in the indicator, and then the indicator rolls over, moves up. It's actually very helpful when the market is trending up. It's very helpful in picking bottoms. So based on the direction right now and the level it's at, there's nothing too alarming right here. The line is moving down. If we can come down here a little bit more and then curl up and start moving up again, then I would say there's nothing hugely wrong here. But if this indicator cannot curl up, if it comes down to 50 or stays where it is and moves sideways, then I would say there's a problem. Because when the market comes down, then as it improves slightly, there should be a slight uptick, a slight expansion in the new 52-week highs. And if that doesn't happen, that tells us that this pullback is different than the previous pullbacks. Here's the S&P 500 versus the NYSE new lows. Something different here is going on. You could see that pullbacks within the uptrend, like here, are matched with slight upticks in the new lows. But obviously, what happened a couple weeks ago is more than just a slight uptick. The theory here is that, like, as you can imagine, when the market's moving up, most stocks are so far above their 52-week low that even when the market pulls back, it takes a week or two for them for even the weaker stocks to make 52-week lows. I mean, a lot of stocks would have to fall for several months to make a 52-week low because they're so far above their low. Which is why when the market pulls back, you just get these little upticks in the 52-week low. But 2 weeks ago we got a huge expansion of 52-week lows, which tells us that this is slightly different. This isn't just a normal pullback within an uptrend, that something might be changing here. But as a point of reference, during a downtrend or within a downtrend, the 52-week lows average will get up to 300, 400. So I would say, based on the direction and the level of this number right here, I'd say something's different, that this pullback is different than previous pullbacks, but I'm not going to officially call it a downtrend until this thing gets up to like 300 or 400. From a trading perspective, that doesn't mean I just hold, because I don't trade on the long-term indicators, because I'm not going to wait a couple weeks or a month for the indicators to officially give me a sell signal. So that's that. So as soon as this thing starts ticking up, I assume that like something might be different happening, and I'll cash out, but I'm not going to officially call it a downtrend until this actually gets a little bit higher. Alright, next chart, S&P 500 versus the put call ratio. As you can see, here's the S&P trending down, here's it trending up. You can see when it's trending down, the put call ratio stays above 1.0 most of the time, and then as the market's trending up, the put call ratio stays above 1 below 1 most of the time. On Friday, it closed above 1, so a line in the sand has been drawn. I've defined what I think is an uptrend and downtrend. If the put call ratio keeps going up here and starts hanging out above 1 here, then I would say the market is undergoing a change, and we're going to start trending down. If, however, this thing can get back below 1 and hang out below 1 as it did for the entire uptrend, well, then this would tell us that what happened recently is just a pullback within an uptrend, and we should at the very least move sideways. Alright, last chart, the S&P 500 versus the average true range. The theory here is that when the market is falling, it falls fast, the intraday ranges are big, but when the market moves up, it moves up slowly, and the intraday ranges are small. So you can see here during the uptrend, we have really low intraday ranges. Pullbacks here and here, we're matched with little upticks here and an uptick here in the intraday range number. So obviously what happened 2 weeks ago, the range expanded huge. This number, this breakout, would tell us that something is different. It would tell us that what happened recently is different than the other pullbacks, and that the market is undergoing some sort of a change. Okay, so I just showed you 6 charts. Of them, the advanced decline line and the 52-week new highs and the put call ratio are not alarming. They're all doing exactly what you'd expect them to do if indeed the market was pulling back within an uptrend. But the other 3, the advanced decline volume, the 52-week lows, and the average true range are acting different now than they have acted in the past, and therefore they would suggest that something different is actually going on, that this is not just a normal pullback within an uptrend, that something is different, there's a character change going on, and it's something we need to pay attention to. Alright, that's all I have. I hope you got something out of it. Like I said, these charts are helpful as far as defining an uptrend and downtrend. They don't change overnight, but keep in mind that the market is still somewhat being held hostage to what happens in Europe. If you get good news or bad news, the market can go up or down. So be nimble. Don't take big positions. Swing trading isn't working great right now because you're not getting a whole lot of follow through. All right, we'll see you next time.